What's up, YouTube? Akinomics back with another stock analysis video, and today we'll be analyzing Intel. So Intel is best known for developing the microprocessors found in most world's personal computers, basically like the microchips that our iPhones use, cars use, ACs, refrigerators, basically what Intel makes the whole world uses. And as we look right here, they're trading at a $25.72 per share with a high of 52-week high of 56.28. Yeah, they dropped about half, folks. So we're gonna see why. And to begin, as always, we will start off with their PE ratio. So PE ratio is price over earnings. Remember that, guys? And it lets us know if a stock is currently overvalued, or undervalued. And right now it's 12.82. And remember, guys, this is the 5-year, not the 1 year. This is a 5-year, and we want to make sure that it beats our goal of 22.5. We want it to be under. Remember, guys, want that to be under. So yeah, it's a big check right there. 12.82. All right, so now we're gonna look at our 5-year return, our ROI. We want the ROI to be 9%. Remember, ROI is return on invested capital. We want to make sure that Intel, whatever it's investing in, it's seeing growth. All right, guys? So, as we see, when we add up the annuals, right, and we divide by 5, we get 15.4%. And remember, like I said, in the other tech industries, I mean, tech in itself always beats ROIs. So we beat our 9%, which is always good. Next, we want to talk about our revenue growth. We want to make sure that Intel is making money, or we see that there's growth in revenue over the past 5 years. So we see 62, 79, big check right there. They're making money. Amazing. Next, what we want to talk about is their net income growth. 9.6 billion. We see a huge jump to 21. No real growth. We lose some, and boom, 19.87 billion. It's a small drop. And this could be explained because in 2019, I don't know if any of you guys really know this, there's a huge shortage, a huge laptop shortage, not from the supply side, but from the demand. And the only reason why the Intel was making money was because during the pandemic, when there's huge demand for the laptops, Intel, Micron, all those stocks were able to make money. But this problem right here with the laptop shortages is a is a sector-wide problem. So not only Intel is facing this. Next, what we want to look at is the debt. Alright, guys, so now we're going to look at their debt. I'm just quickly show you guys how to find it on this website. So you just click on balance sheet, you scroll down, you look for liabilities, and you go scroll down here to long-term debt. So we have 33.81 billion. Remember, we want our revenue over the past 5 years to be able to beat that, right? So we do 79.2 times 5. We have 395 billion. That easily beats debt, so we don't have to worry about that, right? This company could easily pay off its debt. It's nothing crazy. And now what we want to look at is the shares outstanding. Basic shares outstanding right here. They're buying back more shares, meaning that you're getting more of the stock, you're getting more of the piece of the pie, right? We don't want them to be issuing out more shares, because if they issue out more shares, they're diluting us as investors and making us lose profit. Remember, guys, right? We want shares outstanding to be the same or decreasing. If a company is decreasing their shares outstanding, they're buying back more shares, making you own more percent of the company. That in turn increases the price of the stock, which makes us more money. But if a company is increasing their shares outstanding, they're selling more stocks, your stock share is getting diluted. Now you own less. And as we can see, they're diluting, I mean, not diluting, they're buying back more shares, which is always good. Now, a few things I want to talk about Intel. Intel is in a very interesting position right now because Apple, well, let's go out with a few bearish scenarios with Intel. Apple dropped Intel, meaning Apple got rid of Intel chips in their Apple products, their iPhones, their Apple Watches. They don't use Intel chips. Intel in return, they lost 1% of revenue, which isn't too bad. It isn't too much, but I mean, any loss of revenue, it's gonna hurt. But not only that, I think this is which is even more important than the 1% drop is that now they have a new competitor in their market, which is Apple, because now Apple is producing their own chips, not only for their product, and who knows that they could expand it to other softwares as well. We don't know. The next problem we have, another bearish problem, is the supply chain issues. This is a sector-wide problem, meaning that not only Intel's experiencing this. Micron, AMD, Nvidia, they're all experiencing this. In order to make more chips, the machines, the factories, they use the chips in order to make more chips. Meaning we need a lot of money to produce these chips. And as we saw, Intel is starting to lose a little bit of revenue. So that could be a problem for the future. Now let's look at a few more bullish reasons. Mobileye. Intel is financing their own software for self-driving cars. They have seen big volume growth of 42%. But my problem with this is they will be competing with companies such as Tesla, Lucid, and even Apple in this field. So how successful do you think they could really get in this field when there's already two big enterprises, Intel and Apple, competing for this software, right? Another bullish thing I would like to talk about is the Intel expansion. Intel has been spending billions of dollars, like around $60 billion, in new chip factories in Ohio, Malaysia, New Mexico, and Brookfield. That's amazing. But my problem is, are they investing more than what they can afford? Right? If these investments go south, if they don't go how Intel wants it, what's going to happen then? Do they have enough money to cover those losses? Or is the company just going to downward spiral even worse? The last bullish case I would like to talk about is the CHIP Act. The government, United States of America, decided that they want to produce chips at home, basically. They want to have more home manufacturers building the chips here. So the government decided that they're going to give $15 billion in assistance to these manufacturers. My thing is, though, is that I don't want the only good thing about Intel being that they're getting $15 billion from the government. You know what I'm saying? I don't want them to rely on this as good news and why our company is amazing, right? Because just one good thing isn't a good reason to invest in a company. There has to be multiple reasons. And so, my thoughts, I'm not a financial advisor. These are just my thoughts. Whatever I say, please do not take it as financial advice. I do believe that there is huge potential in Intel. However, Intel has to be almost perfect in their execution to avoid catastrophe. Right? in their $60 billion they invested in all these manufacturers, do they have a plan for if these investments go sour, if they fail? Mobile Eye, do they have a plan for Mobile Eye in order to compete with these bigger corporations who've been in this field longer than Intel? Do they have a plan on how they're gonna get these softwares to these cars, right? But with this current stock price, I like my risk to safety, right? Because Intel has dropped tremendously, 50% from this 52-week high. I think that this is a good stock to invest in. I'd say that one thing I love about investing too is you don't have to just choose one company in a sector, right? You can invest in Intel, Micron, AMD. You can invest in all of them. However, it's a discussion for me. It's a discussion of if you want to have Intel as 1% of your portfolio, 5% is more on your level of risk. Alright guys, that's the end of this stock analysis video. If you liked the video, like, comment if you have any questions, and as always, I hope you guys enjoyed.